Hey everybody, it's John King, and this is a special live edition. A lot of phone calls I got today, a lot of emails and text messages, and so I wanted to come out and share what I know and share what I don't know. The topic of the hour is what is going on with the federal government freezing loans and grants, and most importantly, how is that going to impact my mortgage? And I'm going to tell you everything that I know, and we're going to tell you what I don't know. Now, the list of what I don't know is a lot longer than the list of what I do know. But here's what I can tell you. The only government entity that provides mortgages that has come out with any news yet is FHA. And FHA has said we have no change to normal FHA loans. But there's a special FHA product that gives special terms to members of Indian tribes. That program is impacted by the shutdown of the federal government's lending and grant process. So that is the only entity. And I'm going to talk through the other ones that we have to be worried about and what the thoughts are. But I'm going to talk about the ones that I'm not worried about. But the only entity that has given us a direct answer is FHA. And they have simply said FHA loans are fine. This impact is not going to have any impact to FHA loans. But if you are doing, it's called a Section 184 loan, and it's for people who are members of specific Indian tribes, and they get smaller down payment options on their FHA loan. That version of FHA is impacted, will not be able to proceed until the hiring freeze is removed. Now, why do I use that as, first of all, it's the only one I have real information on. But here's the problem. The problem is nobody really knows the impact of any of this. And there's a lot of people in my industry who are putting out information saying, oh man, this isn't going to impact us at all. We don't know yet. We have to wait for every single department to figure out how is this going to impact them. For a lot of things that you think it's going to impact, it won't. This is only relative to money that is coming directly from the federal government. Now, I am unsure about VA because VA is a guarantee provided by the federal government. And so we have to worry about what is, so Maria's asking about vouchers. I'll get to that in a couple of minutes. So VA, definitely a concern because VA is providing a direct guarantee of that money. And so there's an unknown about whether this is going to impact VA. USDA, very concerned about USDA. USDA is actually subject to shutdowns when the government funding runs out, meaning periodically you have an issue where there's an impasse. It happened a couple of times. It almost happened last year where the federal government says, hey, I answered that question, but I'll answer it again in just a second because we got a lot of people who are coming on right now. So I'll recap. But there's a lot of people who, now I lost my train of thought. Anyway, I'll get back on it. We've got, USDA. USDA gets shut down regularly when the government suspends operations, when they hit their credit limit, they can't spend any more money and they shut down operations, USDA shut down. So it's very fickle, very temperamental product that I am concerned may be impacted by this shutdown of federal spending. Now, to be clear, what the and by the way, I've made it really clear on a lot of my podcasts, I am not political. You'll never know my political leaning. I'll never tell you whether I think this is good news or bad, and I really don't want to hear your political leaning. I want to talk factual information. So the president is trying to stop spending that isn't necessary. And so the quickest way to do that is to just put a big red roadblock in front of it and say, hey, you can't spend anything until you prove that you're worthy of spending. And so each of these departments has until February 10th to write out their case on why they should be allowed to spend this money for federal loans and federal grants. The idea being that some of them won't be able to make a good case and that they won't be able to resume. So right now, to repeat, Kay asked a question, and I've got a lot more people who are coming on right now. So the only entity we've heard from is FHA. And FHA said if you're doing any kind of normal FHA loan, no problem, business as usual. But FHA also said if you're doing a tribal loan, a Section 184 loan, those are currently on hold because there is federal loan money that is, or I don't know, grant money maybe, that is going through the federal government and so from the federal government directly. that is impacted. So that's an example where we have big picture, not much of an issue, but specific programs, it is creating an issue, and we have to wait until each department lets us know. The truth is, I'm sure every attorney in every single department across the federal government didn't sleep last night as they're working to figure out, well, what does this legally mean? There's also people who are filing suits in court. So there was a lawsuit or a judge today that suspended part of the order, but it has to do with open grants. And I don't know if that is going to apply to any of these mortgage entities or not. Here's the truth. We just have to wait and see. We have to wait and see what they say, and we're going to get news every single day. So VA has not said anything. USDA has not said anything. Fannie Mae and Freddie Mac have not said anything. VA, I'm a little nervous about. USDA, I'm a little more nervous about. Fannie Mae and Freddie Mac, I'm not nervous at all. I have zero expectation that this is going to impact Fannie Mae and Freddie Mac at all. Had a couple people today say, John, what about mortgage insurance? Mortgage insurance is a private industry. It's private companies that are providing mortgage insurance. So you don't have to worry about your mortgage insurance being a problem. Technically, there's flood insurance that's backed by the federal government, but that's not a loan. That's an insurance program. So you're not granting money. It's not a loan. Trent, I appreciate your comment. I'm not going to mention it. So I made it clear earlier, I'm not going to talk politics. So I'm going to politely ignore your comments. But when it comes to the individual programs, what a lot of people are worried about is what Maria said, which is, do I think this is going to impact Dream for All voucher holders? My expectation is no. I expect CalHFA is going to issue some kind of a notification because everybody's worried about it. But the Dream for All money was specifically state allocated. So the state legislature allocated the money. It had nothing to do with the federal government. The money did not source or come from the federal government. That money's been earmarked by the state. The other down payment assistance loans that are run at a state level, specifically CalHFA's, none of those that I understand are getting any money from the federal government. But there are other down payment assistance programs that do get their money through the federal government. And so even some local down payment assistance programs that are providing assistance in your city or county, the city or county is not coming up with that money. Most of those funds are federal funds. And so I'm very worried about the smaller programs that are specifically around counties and cities. Most of those monies are funneled from the federal government. And so I'm very nervous about those, and we should be hearing about more of those going forward. There's the GSFA program. They are not, GSFA, Golden State Finance Authority, is not a state-sponsored program. Now, I do not believe they're getting any money from the federal government. My understanding of how they work is they're a self-funded program because with GSFA, you're making payments on your assistance loan. But guys, anything is up for grabs right now because we really don't know completely the source of all of the funds. And so when we're looking at the fact that this freeze has happened, it is temporary. It is, some things aren't going to survive this freeze, but right now we have to take it day by day. We don't know what every individual program is how it's going to be affected. I know a lot of my viewers are Dream for All people. I have zero concerns or expectation Dream for All is impacted. No expectation CalHFA is impacted. We know for sure FHA is not impacted unless you're doing a Section 184 tribal loan. VA, USDA, Fannie Mae, and Freddie Mac have not announced anything. So hopefully that helps. Let's see. Trent, you're asking a question about would I buy on the west coast of Florida or southern coast of Texas based on cost expenses such as insurance and property taxes. I'm gonna postpone that. I'm gonna talk for a minute about what's happening tomorrow with the Federal Reserve. I will come back and answer that question and give you some thoughts. But for those who are here for the second part of what I wanted to talk about, which is what is going to happen tomorrow with the Federal Reserve. First of all, I don't know if it's going to rain tomorrow. I don't know if I should wear shorts or a big parka. The truth is, predicting the future is impossible and nobody can do it. But we can all get a pretty decent idea of what's coming in the future, including what the Federal Reserve is going to do. They try very hard to telegraph their moves. So many people have said, John, is the chairman of the Federal Reserve out? Like, is Trump going to get rid of him? Well, we are seeing Trump do a lot of things that people might have thought he can't do. So sure, he could try to do anything he wants to do. Whether he's allowed to or not, technically, it's an independent position appointed by the president, but it's an independent position to be the chairman of the Federal Reserve. Alan Greenspan, not Alan Greenspan. Chairman Powell, Jerome Powell, he has 2 years left on his term, and he said he's going to stay. The president officially does not have the right to kick him out. He is on a path trying to lower inflation, and he's got some major wild cards coming into play with this shift in presidential administration. Number one focus of the Federal Reserve has been controlling inflation, and they've raised interest rates to do that. Last year, they started lowering interest rates because they had won the battle against inflation. Guess what? The battle is coming back. The concern about inflation is coming back. Again, I'm not being political. I'm not saying whether I like or dislike this, but the fact is Trump's move to impose tariffs is likely to lead to more inflation in the short term. Now, a lot of people argue it's going to lead to more supply because we're going to produce more goods and services because the economy is going to do better, and maybe so. But it takes longer for that to happen. So I think we have more concern about inflation in the short term. I believe the Federal Reserve is done lowering interest rates, but mortgage rates already know that. Mortgage rates figured that out a couple of months ago, and they shot up in October and November, and now mortgage rates are pushing 7%. They're actually coming back down a little bit. Yesterday was good news for mortgage rates, even though it was bad news for the stock market. Because the whole DeepSeek issue that's going on, if you haven't paid attention, China has created an AI model that costs way less money to create, and they're saying it's as good as ChatGPT, which has changed the thinking about the stock market, because the stock market's been doing really, really good for the last couple of years under the expectation that the whole AI move is going to create a lot of economic opportunity for the United States, and that we're going to champion the AI development here in the United States. China's just threatened that, and they've put a pretty big threat on that. And so the question is, what's that going to mean to the economy? What's that going to mean to inflation? What's that going to mean to what the Fed and the president are going to do? And the simplest answer is we have to wait and see. In the short term, I think the Fed is done lowering interest rates. Mortgage rates, I think, are likely to come down a little bit from where they are right now, but not quickly. I think we're going to hover this year between the 6 and the 7% range that we've been at. I don't see us getting much lower than 6%. I don't see us going much higher than 7.5%, but there's a lot of wild cards. There's a lot of stuff like Trump saying right now that he's shutting down federal loans that are creating uncertainties. So I want to help to provide as much information as I can. As I get information from Fannie Mae, Freddie Mac, VA, USDA, or any of the assistance loans, I'll be putting that information out here to help keep you guys updated. So at this point, if you have any questions, I'm here to answer them about anything we've talked about or anything else. I do see D. Trent's question, and so I'm going to repeat his question where he said, would I buy on the west coast of Florida or the southern coast of Texas, given the cost and expenses for insurance and property taxes? Here's the deal. Affordability sucks right now for a number of different reasons. I just did a video released last week that I talked about insurance and the problems that are going on with insurance. And insurance is just another piece of the lack of affordability. And ultimately, the solution to this, Mr. Trent, D. Trent, Mrs. Trent, is, I'm going to call you Trent. The solution to this is time. It's time where people's wages can catch up. We're still seeing regular increases in wages. We just have to let the cost of prices don't go down. They don't. Insurance prices are not overall going to go down. Sure, egg prices will go down at some point in time, but not back to where they were. Nothing deflates. Inflation is simply how much it is this year compared to last year. Nobody's comparing it to what it was 5 years ago. So you have to look at it and say, right now, do I believe the underlying fundamental of what I'm buying is going to serve my needs? Because a home is not simply an investment in a stock. If you buy a stock and you bought NVIDIA stock and it just went down by 26% yesterday, I heard it back up again today, but NVIDIA stock fell yesterday. Well, that's an investment you can buy or sell, but not a home. A home, you don't come home from work one day and say, honey, looks like the market's going to fall a little bit tomorrow. Let's sell 50% of our house. You don't do that. You can't sell 50% of your house, let alone you're not going to sell your house because you think the market's going to fall a little bit. You always have to have a place to live. And so home ownership is a little bit different. Do I think that the cost of insurance is taking off and making homes even less affordable? For sure. But we also have a huge shortage of housing that's not getting fixed anytime soon. That also is going to be fixed through time for more homes to be built, but builders don't build for the heck of it. And so if the buyers aren't out there buying, which insurance and property taxes are causing people to not necessarily want to buy, then you're looking at an environment where builders have no incentive to build. And guess what? We can clearly see that the new presidential administration is not necessarily into giving huge financial incentives. Now, Trump has made it clear he wants to support homeownership. He wants to get lower interest rates. He also wants to spend less money. So we're not going to put a whole bunch of incentives in front of builders to get them to go build homes. So all of this adds up to a housing affordability issue that says, hey, I got to live somewhere. If I can make the math work today, and I know that I'm going to be here for the longer term, then I should do it. But you have to make sure the math works for you today. I had 2 conversations with 2 different people today about crazy loan programs that were not explained to them properly. Crazy loan programs. Now, these programs are not bad if they're explained to people, but I am super concerned right now. I'm gonna get on my high horse for a quick second. My industry is chasing loans. We are chasing ways to get revenue because we don't have a lot of people looking to buy homes right now for the same reason that Trent is saying about, look, affordability is an issue. You've got cost of insurance and property taxes and interest rates and house prices and lions and tigers and bears. Oh my, you've got all of these things that are coming from every single corner. And how do we solve it? There isn't a simple solution to it. And so now banks are saying, mortgage industry is saying, well, yeah, but we got to feed the machine. We got to pay for our staff. We don't want to get rid of everybody. We don't want to shut down. And so I had a client today who was in contract a week, was sent disclosures yesterday, and she was super smart. She read through all of her disclosures, and this program gave her a great amount of down payment assistance at a great interest rate, a 6.1% interest rate, and gave her FHA loan with 3.5% down, and literally gave her the money to pay for her down payment and a good portion of her closing costs. It was an amazing program, except they kept 100% of her equity if she sold the house in the next 3 years. Think about that. She literally was sold a program that kept 100% of her appreciation. If the house value went up a penny, the bank got that penny anytime in the next 3 years. If she sold between 3 and 5 years, the bank got 60% of the appreciation. And if she waited 5 years, the bank got 40% of the appreciation. And she had to sell or refinance in 10 years. That's ludicrous. And yet the loan officer said, oh, this is normal. And she said, why didn't you tell me about it? And he said, well, I mean, it's in the paperwork. My industry is crazy, Trent, because they're trying to find ways to get people into homes. I will never do that. If there's a program you want and I don't believe in it, I'll educate you. If you still want to do it, I'll let you do it. But the fact that people are doing this is scary. Insurance is one thing. The cost of property taxes and interest rates is another thing. But we're putting people into loans that literally don't make sense, and we're not explaining it to people, and it is scaring the heck out of me. All right, I'm off my high horse. All right, hopefully that helped, guys. I know I got a lot of people still watching. I appreciate you letting me get on my high horse. DA, I want to talk about what he's saying real quick here, and then I don't have any more questions. If you have a question, if you have a thought, if you want to get me going on a rant, I told my wife I'd be done within a half hour. I got 12 more minutes to rant, so if you want to get me on ranting on something, I'd be happy to. So DA, I appreciate the kudos. Rates, so rates going higher, tons of debt being rolled over, tariffs, etc., inflation rising. I agree, except that there's 2 parts to inflation. Inflation is a supply and a demand issue. And so you've got an issue with what happened during COVID is both. We had an issue with huge demand. Why did we have huge demand? Because everybody got stimulus checks. Everybody was sitting at home with nothing to do and making money and shopping on Amazon. So demand went through the roof. Supply was curtailed. We couldn't get chips for cars. We couldn't get lumber. We couldn't build. The factories weren't running at full capacity because we had to have social distancing, and it created the perfect storm. We couldn't get ships to go through the Suez Canal. In 2020 through 2022, if anything could have gone wrong, it did, and it led to significant inflation for both reasons, from supply and demand. Now, as we go into 2025, I think we're making the right moves to improve supply, which is critical long-term. And so I think that as the markets, both the stock market, the housing market, the mortgage market, and all the players that look at all of this, they're basically looking at all the cards and shuffling everything together like a tarot reader and figuring out, hey, what do I see in our future? I see in our future that inflation ultimately is going to be stabilized. Is it going to be stabilized at 2%? I don't know. The truth is the 2% target is the Fed just throwing a dart. They're guessing. They're saying, hey, we'd like inflation to stay at 2%. Guys, we want inflation. Inflation means your employer gets to charge more for the things that they provide, which in turn allows them to pay you more for helping them provide those goods and services. Inflation makes the world go round. Between 2010 and 2020, inflation was lower than it should have been. They had a really hard time getting inflation in place. That kind of spoiled us from a housing perspective, and now we're paying the price. So a healthy amount of inflation is a good thing, but inflation had been out of control. I wonder if we aren't at a healthy amount of inflation right now, forgetting about eggs, the price of eggs. I never pay attention. My wife does, but well, we shop together, but I'm not paying attention necessarily to the price of individual things. Although I do see the price when we get to the check stand, and it is stupid. But that's another conversation for another story. But in general, inflation at a certain level is good, and maybe 3% inflation is the new norm. That's not a bad thing. But 3% inflation means mortgage rates being over 5% is also the new norm. And so we've got to figure out each part kind of plays against each other. And ultimately, in the long run, do I think inflation is going to be under control? Yes. In the short run, I think everything you're talking about here, the debt, the tariffs, all of that is leading short term to more inflation. And the question is going to be, how do we weather that storm in the meantime? And more importantly, what's the Federal Reserve going to do about it? How are they going to manage it? And that's ultimately going to come down to what happens with jobs, because jobs is the biggest piece of this equation. We know inflation's not coming down, but if jobs stay under control, the Fed is more likely to, meaning unemployment is bad. So under control means that unemployment is not getting spiking and going out of control. So if we have low unemployment continuing right now around the 4% rate of unemployment, then I think the Fed is going to say, hey, we can keep rates where they're at and maybe even raise them a little bit. Okay. If unemployment starts becoming a problem, and I'm hearing bits and pieces about different industries that are having some cracks, if unemployment starts becoming a problem, the Fed has to lower interest rates. So that's the wild card in the meantime. All right. So DA says, thanks for responding. I appreciate it. I appreciate the question. There's still a couple dozen of you here. If anybody has any questions, please feel free to reach out. Please share this with your friends and family. I am not a nonprofit organization, so I have this little QR code floating over my head. I am paid to do mortgages. So if you are looking to do a mortgage, if you're looking for advice about a mortgage, I would love the opportunity to give you that advice and sit down with you. So please scan this QR code while I'm finishing out my paid political announcement. If you have another question, now's your time to post it. So about 30 seconds away from hanging up if I have no more questions. So guys, I really appreciate your trust. I am here to help you purchase homes, refinance homes. I do specialty programs. I do normal programs. I do home equity loans and lines of credit. I can juggle. I can't juggle. Don't ask me to juggle. I won't do it. I suck. I drop the balls. It's horrible. But I'm really good at mortgages. So if you have questions about mortgages, give me a call. I appreciate all of you listening. I appreciate your loyalty. Please subscribe and share. And I look forward to talking to you guys soon. Have a good night. Bye-bye.